I'd like to talk a little bit about the present moment, because you're working across a lot in this world. So I think there's obviously loads of founders right now that are raising, maybe their early stage, maybe their Series A. There's a lot going on in the AI space that's obviously absorbing a lot of the attention, but there are still big raises happening on the crypto side. I know that you work between both. So I just love a bit of a full picture of what you're seeing at the moment with somebody that's so on the ground in this current time.
Sure. And maybe I can answer that question in like twofold. One, I guess, what I think is required at the moment to be able to actually successfully raise. And then also a little bit how I see the market. So that hopefully, helps founders who are listening at least see it at the moment, including myself. One thing, if you are an early stage startup, and I'm really speaking pre-seed, seed, maybe seed extension rounds, prior to Series A, founder quality is the most important thing, and the team composition as well. And what I mean with that is a founder who is obsessed with the problem, who really wants to solve a real problem and focuses him or herself on this, as well as their team is able to attract very strong talent, right? Attract very good teammates, attract good co-founders if they are initially solo, in order to build something that is going to be a category definer, right? And the third thing I think is speed of learning, right? Can they adapt? Can they learn? Can they not get bogged down by a difficult market? Because in the end, you need to maybe pivot a little bit, and that happens to almost everyone. So it's not a failure. It's actually great, because it's part of the journey of becoming a founder. You're not going to be in a year's time in a pre-IPO company, and nobody expects that, right? Even venture capitalists don't expect that within that short period of time. So you are allowed to pivot, but be obsessed with the problem, attract really strong talent around you, and learn and adapt. I think that's kind of the founder quality bucket that I think is very, very important. And then a little bit more tangible maybe is market timing, right? Is the market becoming inevitable? Are you as a founder, are you surfing a wave, or are you starting to fight because your market timing is off? That is a very, very important aspect as well. Because I've seen phenomenal founders with a phenomenal product, really exceptionally well, but they were just too early. And they ran out of runway because they paid themselves maybe a little bit too much, or they didn't manage the burn rate very well. The market went into a downturn. There wasn't really demand for the product. Fundraising got really hard, right? And then if they would have been able to, survive 6, 9, 12 months longer, they then would have been at the right place at the right time. So market timing is really important. I know it's not always that easy to time it, but I guess, working with people like you, or working with experts, is also something. If you're not so confident, and if your solution is ready, if the market is becoming inevitable, then ask, right? Get help, because market timing is an important part. And then I think third point on what I think early stage founders need to really look for is most founders in the web, I'm speaking specifically Web3, by the way, right? Most founders in the Web3 space really focus on product, really build really strong tech, are really tech obsessed. But the problem is there's no distribution, there's no demand, and there are no customers for that product a lot of the time. And that becomes very, very difficult. So when you're building in the Web3 space, you have to think about distribution, right? Who's actually going to buy this? Who's actually going to pay for this? And how much? So that really clear assumption, and you can make a really clear projection on if this is the right product, if this is the right market timing, and if you have the right distribution channels for this product or service. Because otherwise you may have the best technology, but if you're not in the right, market timing, and if you don't have anyone wanting to buy it right now, then it becomes you're fighting against waves which you just won't be able to fight against. So I really don't think that the startups die because their technology fails. A lot of the time in the Web3 space, the technology is exceptional. They die because the distribution fails. And that's where getting help can really be valuable, or not doing everything yourself, getting a strong team, doing research, speaking to people, going to conferences, understanding what the competitive market is doing is very, very, very important.
And it must be, I mean, it sounds like you guys have experienced this maybe quite a few times where you've actually spotted that this is something that is a gap in the market. It's very interesting. It's very investable. It's got the potential to be adopted, but maybe they're a little bit early. So I'd be very interested, what's your processes to check that? Like, do you look and see where the market currently stands if you feel like this is a significant gap? It would be really interesting, I think, for individuals that are designing, new tech to understand how maybe a VC would approach that.
It's a good question. I think, we also don't have the magic wand.
Yeah.
So this is also research, and also, our kind of, to some degree, also opinion based on research and analytics, which may or may not be correct, right? This is also important to note. But an example to answer the question, maybe if we look at real world asset tokenization, for example, right? Like, this has been a topic that people have been building in for a very long time, right? The past 3-4 years, but really, really receiving the right attention, receiving institutional adoption, receiving more interest across a wider variety of real world asset is really only coming to fruition now, in my opinion.
That's a very good example.
And so all of those companies that had an incredible idea like 5 years ago, will have had to have enough runway and enough stamina to survive and reiterating their product and adapting to the market, to actually now starting to see the demand and the distribution ability.
Yeah.
And that is tough, right? Because we all were like, yes, this is a great idea, right? This is the future. So absolutely, we need to invest, we need to build, we need to go for this. And I believe, arguably, I think most of us, investors and builders, probably thought we would see a little bit more adoption a lot earlier than we're actually seeing. But then it comes down to, okay, if this is the case, then how are you keeping yourself alive, right? Because if that's what you believe is going to happen and you see snippets of it actually coming, then how can you survive
yourself?
Exactly.
And I think we have the tendency to be very aggressive in the Web3 space because there is so much competition. I think founders, we get this kind of competitive comparison syndrome where we see founders that appear to be successful overnight, and we kind of try and almost pivot to be like some of the hype, and that can really be detrimental. I always try and advise founders to stay on their path. Obviously, I'm a fan of pivoting when necessary, but for example, a very good example, the RWA industry. And like, I'd like to pick your brain a bit as to why you think potentially it has taken a bit longer to progress. But from my perspective, it's required the infrastructure, right? Like, we're talking about a completely new financial system and trading completely different types of assets. And that is going to take quite a long time. And at the end of the day, we do need that institutional adoption to make it viable for retail and for capital markets as a whole. So I don't think we could have expected that to happen overnight, to be honest.
Completely agree. I think I echo what you said. Absolutely. And I, to maybe add one point, I also think that we need to rebuild trust as well, with the audience outside the Web3 space, with the institutional audience.
Totally.
And like you said, the rails need to be there, the infrastructure needs to be of a certain level, the trust needs to be there, the projects need to be there, and then the demand needs to be there. So I think we have had definite setbacks. We've had the development was definitely slower, I think, than we expected. The institutional interest has been slower than expected. But yeah, I don't think we were ready. But slowly,
I think you're so right about the trust thing. And I think it's a very pivotal time in our industry. And I think I'm seeing a lot of people kind of pivot out of the space and move into other areas in tech. And I think that's completely respectable. But people like ourselves that have been a part of on-chain finance really since its inception, and the few people that are still here trying to professionalize the industry, really seeing its potential, I think that there needs to be a little bit of respect for that, because it's tough. It's a tough time. It's hard work. It's very difficult to get this industry to the level of professionalism that it deserves to be at. And I think the last market that we experienced has definitely, on the bull run side, has definitely exposed a lot of things that just can't be a part of the future in crypto, really, to be honest.
I completely agree. Yeah, I don't think I have much to add there. I think that's very well put. And I actually think, when there's a change and a shift in market and sentiment, in general, industry changes, then we see those surviving who really have strong potential to survive and who are building something for the long run. And I think we're starting to see that now. So I actually think, we're on a really good trajectory in some ways. But it is a tough time, and we're weeding out, I think, a lot of builders who were in it for the short run, but also understandably so, who are now building maybe in other frontier tech areas that they might find more promising for the future, which I think is also a fair argument.
Yeah, and you're obviously